Hello everyone, Ulancey Peterson here. Today it is Thursday, January 23rd, 2020. It is 9:08 in the morning. Currently in Los Angeles. About to go to my favorite Panera Bread and enjoy some oatmeal. All right, everyone. I am looking into making a series of videos about the relationship between Assembly Bill 5, California Assembly Bill 5, which is now Labor Code 2750.3, and the contracts that we signed with the rideshare companies, specifically Uber and Lyft, and go through major points of all of this stuff bit by bit to help give a little bit more understanding of what it is we are dealing with as rideshare drivers. But I wanted to start the conversation with I think something that will help everyone understand what's going on, and that is basically following the money. Now, keep in mind, because I got to say this at every video, I'm not an attorney. I'm not trained in any way whatsoever on how to do the law. I'm just a rideshare driver who reads all this stuff, and I have a little bit of understanding about it. I could be totally wrong. This is not legal advice. This is just my opinion based on what I've read. If you need specific legal guidance, you need to speak to an employment law attorney. They will be able to tell you the real deal on all this stuff. So I'm just saying how I understand it, because even though it's straightforward, in some cases it can be kind of complicated. Okay, so that out the way. There are 4 ways you can see this when it comes to following the money. You can be an independent contractor. You can be a dependent contractor, which currently does not exist in the United States from my understanding. There's an employee. You could also be a franchise owner. So when Assembly Bill 5 was first proposed, I thought that maybe Uber and Lyft and the various companies could get around the provisions in Assembly Bill 5 by simply making each driver a franchise owner. I mean, think about it. We pay fees to the parent company. We have logos on our cars, and we are delivering a consistent service to the customers that seek to do business with the specific franchise. Think of us like, McDonald's driving around. We do the same thing. So anyway, but there is a part of the law that exempts that negates that fact. That is 2750.3 E1B. I'm getting all the technical stuff about it, but it says here, the business service provider is providing services directly to the contracting business rather than to customers of the contracting business. So I read this and I realize this, when you look at all of the labor code 2750.3, this is the one sticking point they will have a problem with, because how can you say that we as drivers are not servicing their customers? So to illustrate it, perfect example, let's look at the difference between a franchise owner and what we are doing, and let's just simply follow the money. So first, we're going to use the independent contractor, which would be your TCP driver. This TCP driver has their own corporation or LLC. They have their own TCP permit. They own and operate, finance, or lease their own vehicle. They don't rent it from anybody. It's in that company's name. They have their own commercial insurance, and they have their own payment methods. The money comes directly from the customer to the operator of the vehicle. That's an independent contractor, straight from the customer to to the operator of the vehicle. The operator determines how they want money: cash, check, Venmo, Clover, Square, any number of ways that they get the money directly to them. Okay, they pay no fees to anyone else other than taxes and credit card processing fees. Whether or not they use software is up to them. Now let's look at a franchise owner. You go to a McDonald's, you buy a Big Mac. The franchise owner pays money to McDonald's Corporation, but when you run your credit card to pay for that Big Mac, you are giving your money directly to the franchise owner. Again, the money goes from the customer directly to the franchise owner. The franchise owner, in turn, pays fees to the parent company, McDonald's. Based on a percentage, a monthly, all that good stuff. Now, we as drivers, it's a different story with us. When the customer pays for the ride, the money goes to Uber first. The money goes to Lyft first. And then Lyft and Uber pay us. There's that middleman in the middle. How can we be independent contractors when we are not receiving our money directly? I'm sorry it took me 6 minutes to tell you this, but it's like every time they tell us that we are independent contractors, every time I hear that we are independent contractors, it really, really makes my blood pressure go up, because it is not the truth. This is why Assembly Bill 5 exists. It exists to correct this. And when you look at the law, 2750.3 E1B, the business service provider is providing services directly to the contracting business rather than the customers of the contracting business. All you have to do is simply ask this question. When the customer pays for the service, who gets the money first? If you, the driver, get the money first, you're an independent contractor. But here's the deal. In the specific instance of being a driver, in order to be an independent contractor, it means you're independent. It means you don't depend on anyone or any entity for anything in order to legally transport people. Meaning, you have your own corporation. You don't depend on Uber Incorporated. You don't depend on Lyft Incorporated. You don't depend on XYZ Incorporated. You have you Incorporated, or you LLC. You don't depend on anyone else's TCP but your TCP permit. With Uber and Lyft, in order for us to do this, we have to depend on their TCP permit in order to do the job. It's on the bottom of every single one of our permits. We have to depend on their airport permit in order to pick up people at LAX or San Francisco Airport or any other airport in California that requires a permit in order to do business on their property. We depend on them to do the payment processing. We're not allowed to accept cash payment for fares. We can take it for tips, but not for fares. We rely on them for the blanket commercial insurance. Even though your insurance company may tell you you need to have a rider policy added to your personal insurance coverage, at the end of the day, the insurance industry has told Uber and Lyft, and the state has told Uber and Lyft, you got to have commercial insurance. And so you're covered under their commercial insurance policy also. As an independent contractor, you have your own corporation or LLC. You have your own TCP authority from the state of California. You have your own commercial vehicle registration. You have your own commercial vehicle insurance, and you have your own airport permit if the airport requires it. If you depend on any of that from anyone, you are not independent. And that includes people that drive rented cars. If you have to rent the authority from someone, you're not independent. Why? Because as an Uber Black person, and I know this because I've done it for so long, the money goes from Uber to the Uber Black partner first, and then the Uber Black partner sends me the leftover. You're not independent. You are independent when you get 100% of the money directly from the customer, and there is no middleman other than credit card processing if you choose to accept credit card transactions, which in today's world is a reality. I hope this video made a little sense. I would love to hear your feedback, but the law is very clear here, and I answered this question simply because one of my subscribers, Money Over Fame, he asked the question, so AB5 will ultimately make rideshare even worse in LA. What AB5 will ultimately do is shift rideshare back to what it was, and that is simply being a taxi cab service, albeit with an app. Because moving forward, beginning July 1st of 2020, 6 months after the implementation of Assembly Bill 5, I predict that anyone that wants to provide transportation services will have to have their own TCP numbers, will have to have their own commercial insurance, will have to have their own commercial vehicle registration, will have to have their own corporations or LLCs. And then when they get involved with a business-to-business relationship, the core function of how we relate with Uber will completely change at that point. Even now, when I'm on the phone talking with Uber, if you call in the state of California and you ask for service, they will say the name of your company. May I have the name of your company? They're not asking you for your name. They're asking you for the name of your company. And it's going to be very interesting in the next 6 months. All right, everyone. I look forward to your comments. Thank you for subscribing. Thank you for your attention. I will catch you on the next video.